Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Thursday, the 13th. Hopefully the 13th is going to be lucky. Overnight, kind of two-sided trade, quiet. D's corn down 4 cents, a high of 81, low of 76. Um, Down 4 cents here at 76 and three quarters. Novi beans, a high of 88, a low of 79. Trading at 79 and three quarters, down 3.5. It could just be overnight computer jockeying. We'll see what happens. As the smoke clears from the USDA, the really bullish thing was the uh, drop in the new crop carryout, new crop corn carryout. That was, if you dig into it. So we'll see what the market thinks. Hopefully, it was more than just a one-day wonder. We did get a good bounce, however. D's corn at 476 is a lot better than D's corn at 458. Remember, guys, we set at 458 for about a week, which is halfway back. So the next resistance is 490. That's where D's corn needs to breach. 488, 490. There's a trend line up there. If we can pop through that, then you're going to see more supportive action. So I think new crop corn is going to be the driver for this. Novi beans at 1180, still not bad historically. Nobody wants to go back down to 1125. We did get that spike up to 98 and three quarters yesterday. I don't know who that was, but that was a great sale or a terrible buy, one of the two. Um, December wheat, 670 and a quarter, hanging in there. Kansas City wheat, 740 and three quarters, up two and three quarters. So wheat's hanging in there as well. That continued driver is not the USDA. It's the concerns that Russia will have 35 to 40% less exports, and that is the underpinning reason that wheat continues to be higher. We'll see if that can hold up as well. Switching over to the protein complex, cattle continues to be under pressure. The last 3 or 4 days, we have not had our customary rally after an opening low. There's a lot of volatility. Some people are talking about, there's too much AI involved with cattle. That's certainly a possibility. All I can say is welcome to the rest of the world. Um, October fact cattle, if 223 holds, that's positive. That was yesterday's low. That would be the level I would watch. The recent multi-month low was 217. So, 17 to 23, there's $8 worth of risk here right now. In the feeders, yesterday's low 338.60, called 339. 340 had been a big area that we were watching. If that fails, then the risk is the multi-month low of July 27th down at 331. So there's $8 worth of risk there. So $7 worth of risk in the fats, $8 worth of risk in the feeders. That is the way it looks right now. Moving over to the hogs, there's been a lot of pressure back in the back months once again. We had that really nice rally from 77 to almost 84. We've given that all back. We're trading at 80, 78. If I'm a hog producer, this is where you want to make sure that you have disaster puts out there. You don't want to be in a situation where we watch 78-cent cattle turn into 60-cent cattle. So get some hedges on out there, guys. All right, this is Chris. Well, have a good day. 312-638-8868. Hopefully, with the bounce from the USDA report is more than a one-day wonder. Take care.